Hey everyone, welcome back to the Mark Loeffler Experience. And if you haven't been living under a rock, you understand that we are living in an inflationary environment right now. Now, we did talk about stagflation a couple videos ago. We'll link that down below if you want to figure that out. But we are living in an inflationary environment. And what is the government doing to prevent that or slow down the rise in inflation? Well, obviously they're raising interest rates. If you have a variable loan, you understand that it's costing you more every month to pay that loan than it did 6 months, a year ago. It just means that there's less money for you to go spend in the economy, which then would slow down spending, which then means that the economy will slow down and inflation will go down because there'll be more goods on the shelves. Now, it's funny because that's the Bank of Canada and that's their role. What is the government doing? Well, a couple of things. They're giving free money to people who are renters. And typically, let's just level. I don't know how many renters are of lower income. I don't have the stats. I'm not pulling them up. But people who have lower income, if they get free money from the government, i.e. they're not paying the rent with that money, but they're going to get a stipend from the government, well, not like they're going to go save that money. They're going to go and use it for, maybe it's basic household goods, maybe it's something else. Maybe, none of my business what they use it for, but they're going to spend it. So you're kind of defeating the purpose of the interest rates hikes on one side, and then on the other side, we have the government increasing taxes. Now, they're not increasing income taxes, they're not increasing sales tax, they're increasing payroll tax. So everybody, doesn't matter how much you make, $305 less in take-home pay as of January 1st. So that is one way that they could, tighten the economy more, is that they're, it's not by raising interest rates, which affects people who have loans. This is like, hey, we're just going to take $300 out of the economy. So on one side, they're giving money away, and which does not help inflation. And the other side, this will affect inflation because everybody will have $300 less a month to spend. Like, that could be a couple weeks worth of groceries, right? Like, that could be, whatever. Like, that's not insignificant. Obviously that, and now this obviously isn't a tax, but it's still, and your CPP premiums are going up 7.3%, which cost you $255 more. That is your pension for when you turn 65, I think is when it is. I don't know about that. Your EI and CPP contributions is $304.71 more per month. 7.3% increases because, well, there's inflation. I bet you CPP isn't doing well in this current investing environment either. Guys, I don't know. Like, you got one hand, they're tightening over here, they're giving out, they're taking. Like, what's going on out there that we can't just figure out and across the board and have the government work with the Bank of Canada, work with, like CMHC to build like affordable housing, to work with all these government agencies, and actually have a cohesive plan. What would it take to get there? I'm going to leave you with that question. I want you to comment down below. This video is brought to you by Mark Loeffler Real Estate Services. If you're looking to buy a home, sell a home, or invest in real estate, please do reach out to us. We're looking forward to talking to everyone. Hit me up on Instagram if you haven't already. Thanks everyone. We'll see you soon.